Ladies and gentlemen, good day and welcome to the post-results Q4FY25 earnings conference call of Railtel Corporation of India Limited, hosted by Antique Stock Broking. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during this conference call, please signal for an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference call is being recorded. I now hand the conference over to Mr. Vishal Periwal from Antique Stock Broking. Thank you, and over to you, sir.
Good morning, everyone, and welcome to the earnings call of Railtel Corporation. I'd like to thank the management for giving us this opportunity to host their call. The management team in the call is led by Mr. Sanjay Kumar Ji, who is Chairman and Managing Director, Mr. B. Rama Manohar Rao Ji, Director Finance, Mr. Manoj Tandon Ji, Director Projects, Operation and Maintenance, Mr. Yash Singh Tomar Ji, who is Director Network Planning and Marketing, and we also joined by other senior team members from Railtel. So as usual, we'll have a brief overview from from Sanjay sir on the gone by result, and then we'll have lines open for Q&A. Thank you, and over to you, sir.
Very good morning to all and everyone. It gives me great pleasure to interact with you on the company's performance in the backdrop of Q4 financial results for financial year 2024-25, which were declared by the company on 1st May 2025. The company achieved operating revenue of rupees 1,308 crores in Q4 of FY25, as against rupees 768 crores in Q3 of FY25, registering the Q-on-Q growth of 70%. The telecom segment contributed rupees 359 crores and project segment contributed rupees 949 crores in company's operating turnover. The company achieved total income of rupees 1,329 crores in Q4 of FY25 as compared to 782 crores in Q3 of FY25. The profit before tax in Q4 of FY25 is rupees 151 crores as against rupees 90 crores in Q3 of FY25, with Q-on-Q growth of 69%. The profit after tax in Q4 of FY25 is rupees 113 crores as against rupees 65 crores in Q3 of FY25, registering a Q-on-Q growth of 74%. The company achieved total income of rupees 3,551 crores in FY25 against rupees 2,622 crores during the corresponding previous year, with growth of 35%. Profit after tax for FY25 is rupees 300 crores as against rupees 246 crores in the corresponding previous year, with growth of 22%. Earning per share for year ending 31st March 2025 stands at rupees 9.34 as against 7.67 for previous financial year. During 25th year of our journey, our progress has been steady and impressive, with consistent growth in operational revenue and profits. We are having a healthy order book of rupees 6,616 crore, with a visibility of sustained growth in operating income in coming quarters too. We remain committed to pursuing growth and creating value for our esteemed investors. We are also exploring new opportunities in order to realize our true potential. I thank you for your trust and collective vision for the future of this company. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manish Otswal from Nirmal Bang Securities Private Limited. Please go ahead.
Yes, sir. Thank you for the opportunity. My question on the, can you tell us what is the total order inflow for the full year compared to F24?
So, new orders during this financial year, means previous financial year, is 3,146 crores. As compared to previous year, I think you are talking about 2023-24?
Yes, sir.
So that was 3,178 crores.
So basically, it's a flat on a full year basis compared to.
No, sorry. It was around 2,600. Let me give this number because this number is not correct. Previous year's number I will find out.
Okay. The second is of the current.
Yeah, please.
Can I ask, sir?
Yeah, please.
Yeah. So second question on the current order book execution. So can you tell us the time frame when we'll be able to execute this order? What is the short duration order book size and what is the long duration of the order book? So that we give the visibility in terms of yearly revenue for 26-27.
Yeah. So last year, means 23-24, it was around 2,500. 2,583. Yeah.
83. Okay.
And when you talk of year one projections out of this order book is around 2,600 crores. Is that what we are expecting out of this?
Okay. And the margin at a blended level will remain the same, or there is scope of improvement margin also because of the mix of orders?
I think it will remain in the same range, 4 to 5% overall, if you talk.
Blended.
So blended means put together. If you're talking of project alone, it is 4 to 5%. But if you talk of put together all the segments, then certainly it will be around 11 to 12%. Talking of EBIT.
Yeah. And the last is, what is the update on the coverage side? Because we keep on hearing on this thing, but nothing is major coming out. So what is the stage of the orders we can anticipate for Railtel to grab it from the coverage side of opportunity? And so can you update on this, sir?
Yeah. So last quarter itself, we have got our first order. I think you might have missed it. We have posted it on CV also. So we have received first order of 244 crores from East Central Railway.
Okay. Thank you, sir.
Thank you.
Thank you.
The next question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Yeah, good morning, sir. Thanks.
Good morning.
And very heartening to see such a strong performance.
Thank you.
Couple of questions. First, on the order book of this 6,000 crore, 6,016 crores, what we have given for now, can you break up between the railway and non-railway?
Yes. So if we talk of railway, it is around close to 30%, 29.72%, and remaining is non-railways.
Got it. And in this new order book, what we have...
Sorry to interrupt, sir. I would request you to please use your handset.
No, I'm on the handset. Can you hear me now?
Yes, sir.
And second question is on the order inflow of 3,146 crore, what we have done this year, can you help us explain which are the large projects which have added this year?
Okay. So, if we talk of this year, so we have got this Kavach order, of course, which I spoke to you, to the previous investor. We have got an order in Northeast Frontier Railway for tunnel communication. That was 137 crores. Then we have got an order from state of Odisha, the state government of Odisha, for complete intelligent enforcement management system for their state transport authority. So that is also 22.33 crores. Then we have got a data center order from Munition India Limited, Pune. That is 85.03 crore. Then Maharashtra State Power Generation Company for their network structuring. That is 88.28 crore. So you want me to narrate all the numbers?
No.
These are major ones. Yeah.
And these are generally the 2,600 crores in the year one of order book. This year we did around 2,200 crores in the project. So it is fair to assume that next year we should do something around 2,600, 2,700 crores.
Sorry to interrupt, sir. I can't hear you clearly.
Can you hear me now?
Yes, sir.
Okay. Okay. Sir, I just wanted to understand this year one of project book you said was around 2,600 crores. In that, can you help us understand that this should be the potential revenue for next year versus 2,100 crores of revenue what we did for this year?
We will do our best to do this. That is what we are also expecting.
So around 20% kind of a growth is possible even for next year on the project business.
Yes.
Got it. Second question is on the telecom business. Can you help us with the revenue for all the three subsegments, NLD, ILD, and IP1 for Q4?
Yes. So, NLD, it was 622 crores, ISP 437 crores, and the third one, it is 292 crores.
292. Got it. Any update on Railwire? I think that is growing flattish. Any changes are we doing in the Railwire for accelerating the growth rate?
Yes, actually, I've been sharing my views on this. The industry being very much cutthroat and the problems for operators who are at the middle level, they are struggling because the lower level small ISPs, they are not providing services to the satisfaction of the customer, but they are trying to many times poach and reduce their tariffs. And on the other hand, the big ones, they are also coming with new technology. So there is very, very huge competition in this market. But we being in the rural market, our main segment where we focus more, there we are slightly better. So it is, we are also seeing that this is flattish, but we are continuously trying to increase our reach. And in the last quarter, we have, in fact, we have been able to get some breakthrough. Before that, previous 2 quarters, we were not satisfied at all. In fact, there was negative growth we had seen sometimes. So I would say that we are trying our best in this market.
Fair enough, sir. Fair enough. So in that backdrop, how do we see telecom services revenue growing? Because I think this year we have grown at mid-single digit, and the ambition was to keep growing at double digit, 10-11%. Do you think with this breakthrough in the Railwire, we should be hitting that 10% in FY26?
we are trying to do everything. And in fact, if you remember, last year we had spoken about GFGNL, Gujarat opportunity, but there had been troubles and we are still not through there. So we were expecting that it should come. So those efforts are still going on. Similarly, we are trying continuously different product mix in this segment, including OTTs and all those things. So we are certainly trying to take help from ISP segment, but we have thought recently, in fact, we had a discussion amongst ourselves that even NLD also, we will try to do something better this year. Let us hope that we succeed in that.
Got it. Last two questions. First, on the LTE rollout by Railway, have you seen any activity and any tendering bidding that we have seen in that?
So LTE is now, what we have heard is not in the consideration by Ministry of Railway. Probably they will go in for 5G, but we are also waiting for those decisions, and then only these tenders will come. But till then, the Kavach will work on UHF. So certainly UHF rollout will happen wherever the Kavach will be commissioned.
What is this UHF? Unlicensed?
No. UHF is a technology which is, you can say, which is already being used by railways, and this does not require any spectrum.
Got it. So it uses our fiber?
Not this spectrum which has been allocated to us for LTE. So there you require smaller. It's very small. In UHF, spectrum requirement is very small, and that is already there with railways. It has been used by railways in the past also.
Clear, sir. And on the data center, which we were rolling out 102 edge data center, any development on that side? When can we expect that revenue to start flowing for us in FY26?
This year, we are now ready, almost ready at 2 places. And we are expecting that this year, 7 to 8 edge data centers should we get by end of this financial year. In fact, we were expecting it to happen faster, but there are nitty-gritties where I think which was not foreseen by us. But as we now know the things in detail, we expect that 7 to 8 data centers should happen this year, and the revenue on the conservative side, I would say that around 10 crores should come this year. It may be more also, but I expect that on conservative side, it should be 10 crores.
This should have ideally higher margin, right? Because we are generally getting the share of it and less of the cost. So margin from this 10 crores should be high, right?
See, if you see higher margin, since this is a PPP, the investment is being done by our partner. So if you see in that sense that Railtel would be marketing front without any substantial investment, yes, it is high margin. But if you see from the revenue point of view, the entire revenue will be booked in Railtel's name. So then that will be another perspective to it.
So we will book the entire revenue and then pass on the benefit to the customer.
Yes.
Okay. So this 10
that is our partner.
And we will only get a small portion out of it, right, as a marketing partner?
Yes. No, not only marketing. We'll have complete control of the data centers. It is not only marketing. We have, because he's only making it investment part of it, but the technical control, the data center will be seen as Railtel's own data center. It is not their data center. So all security and everything has to be taken care of by us.
Very clear, sir. Very clear. Thanks for patiently answering all those questions, and best of luck for the coming quarters.
Thank you, Sanjay ji.
Thank you.
Sir.
The next question is from the line of Ashish from JM Financial Mutual Fund. Please go ahead.
Yeah, thanks for the opportunity. So, to the earlier participant, you said 10 crore would be the gross revenue or your own net revenue?
10 crore is the revenue which we are expecting from edge data center.
Okay, so this is
Revenue
after passing on.
Sorry?
This is after
So there will be
passing on the share.
expenses. There will be expenses, of course, which you can say that it is share also. Revenue share which we have to share with the customer, with our partner.
Okay, got it. And earlier, the LTE and Kavach rollout in the Indian Railways, so that amount was projected to be around 30,000 crore in the next 5 years. So now with LTA on the back foot, how much would what's your expectations of the Kavach order?
See, Kavach and LT both are different things. As explained with the previous question, Mr. Panjesh from ICICI, I explained everything that LTE is a different thing and Kavach is a different thing. So Kavach will now get rolled out on a existing technology that is called UHF. So that of course will happen. So right now, as of now, you are right that this Kavach thing, LTE thing is not there, but certainly it's going to come with upgrade. But those indications we are yet to get from Ministry of Railways. But as far as Kavach is concerned, it will get rolled out.
Okay. That's fair enough. Sir, and you are also in the process of exploring more OEMs, right, for this Kavach project itself. So any progress or are you in discussion with more OEMs?
No, I think during last introduction itself, we had cleared that we have now firmly signed agreement and MOU with the single OEM, because before that it was not happening. So then we were continuously searching for partners, but now we are there with Quadrant Future Tech.
Okay, fair enough. So lastly, on this our partnership with Microsoft, which was announced for 5 years, any progress? Where are we?
See, we are continuously interacting with them, including at their higher management teams. So it is not the right time to say anything, because it might affect our prospects in the market. So I would not like to share those details, but yes, we are continuously in discussion with Microsoft teams.
Thank you, sir. Thanks for your answers.
Thank you. The next question is from the line of Harshit Nagpal from Yes Securities. Please go ahead.
Good morning, sir. The first question on the order book, could you give the breakup for tender and non-tender for the order book?
So, order book includes around 61%, 62% from tender and 38% from through nomination.
Right. Also, sir, while the revenue growth for us year-on-year and quarter-on-quarter, Q4 year-on-year and FY25 year-on-year has been great, the margin has gone down by 100, the PAT margin by 100 bps, and EBITDA is also lower than what you had guided at halfway stage of the financial year. While I see the expenses are shot up extensively, any particular other reasons for this?
See, I've been forecasting a growth also at 25 to 30%. if you remember last year. But
Right.
we have grown by 35%. So then you can see that we have certainly picked up some orders which were low risk, but faster delivery and all that. So certainly if you see the absolute numbers, we have done the right thing. We had a choice that we did not pick those lower margin orders and had continued to remain in the 25 to 30% bracket. So I think our management decided that no, we should not lose on this account.
Right. Thank you. Also, sir, the project work services breakup for railways and non-railways, if you could provide me with that for the quarter.
Yeah. Sorry?
Yeah, I asked for the breakup for railways and non-railways for the project work services, PWS segment.
For this year?
Yeah, for the year and for the quarter, if you could give me both.
Okay. Just a minute. So railway, we have earned 508 crores this year, whereas non-railways is 1,607 crores. If you talk of Q4, it was 213 crores for railways and 737 crores for other than railways.
Right. Thank you, sir. Also, the last question on what is the ARPU for rail wires for this quarter?
ARPU, if we talk of ARPU in the last month, it was certainly lower because as I explained to your friend in previous questions, in February and March, we had to take some aggressive calls and our ARPU was 479 rupees at the end of the quarter.
And sir, the capex for the year, now that the year is complete, how much have we done and how much of that and for the data center?
Sorry, your full question could not be heard.
So the capex for the whole year and how much of it is for the data center that we've done in FY25.
Okay, so capex was 320 crores. Out of that, 86 crores was for data center.
86.
86.
Right. Thank you, Sanjay. Thanks a lot. Congrats on fabulous results.
Thank you.
Thank you. The next question is from the line of Parimal Mithani from Credential Investments. Please go ahead.
Sir, thank you and congratulations on a good set of numbers. So
Thank you.
Just wanted to understand in terms of your going ahead, how do you see your order book going ahead in our next 1 to 2 years? If you can give us detailed answer for that.
So
and secondly, sir,
this year, please go ahead.
Sir, please go ahead. Sorry.
So we are looking for certainly fatter order book this year, and we'll be targeting around at least 4,000 crore orders coming in this year.
Okay. And sir, if you can tell me what basically big orders, if you can highlight, if you can tell us right now, sir.
Sorry?
So what are the big orders you're having with this 4,000 crores which were there? So if you can just tell us.
See, I think it won't be appropriate for me to reveal that information right now.
And sir, if you can throw light on your video surveillance project, how is it going on and where it are?
It is. So now this project is on track, and we hope that this project will be completed this year.
Okay. And so any revenue guidance for the current year? So how do you see in growth in expense?
We'll start to maintain the 25 to 30% growth.
Okay, sir. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Harshal Solanki from Equitree Capital. Please go ahead.
Hi, team. Good morning. Sir, I had a question on covers.
Yes.
So we announced one order in the last quarter, but after that, your competitors have announced multiple tender wins, and we have not won any tenders. So what are the challenges we are facing, and how do you plan to win more tenders in the future, is my first question.
See, why could we not win? Certainly, we introspect ourselves because we have got our first order in Feb only. So we introspect in-house that where we have gone wrong or what has happened. Somewhere somebody has taken a very aggressive call that is also was unexpected. So there are different reasons, but we are certainly taking into account for future tenders.
Okay, and what's the strategy? Do we also plan to get aggressive on the pricing to win more share?
Your voice is not coming clearly. Sorry.
Is it better now?
Yeah, better.
So my question is, what is our strategy to win more tenders going forward? Do we plan to get aggressive on the pricing as well?
See, again, I will not be able to say anything on strategy part and all that, but certainly we are doing our best. That much I can assure our investors.
Okay, and the second thing is, are we confident of getting enough hardware supplies from our OEM partner, because they also have a huge order at hand and they have to do it by November. So even if we win orders, are we sure of getting supplies from them to install the hardware?
See, the orders which are coming in now, they have to be 4.0 compliant, version 4.0 compliant. So people have material in stock and everything, but those 4.0 compliance approvals are in progress, and none of the OEMs have got that 4.0 compliance. So that is true for us also. So I don't think any supply constraints will be there. And moreover, since Quadrant is our exclusive partner, so certainly he is not going to supply to anybody else. Then also I don't see any constraint on supply side.
Understood, sir. This was it. Thank you for answering my question.
Thank you.
Thank you.
Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Viraj from Jupiter Financial. Please go ahead.
Yeah. Good afternoon, sir. My question is, since you are earning so much of the orders, what will be your current year top line, and how does the bottom line look like? And any guidance here for the next year forward, if you can give?
Current year, we are going to grow in 25-30%. That is our endeavor, and always try to do better. And if you talk of PAT, so again, I think because our project side is getting heavier, it will certainly have some pressure on our PAT also. But we'll try to do higher margin, better margin projects, try to get such projects. But again, it is not in our hand, it is competition which decides. So I would say that it is not going to get affected much because project segment is getting heavier. But certainly it is going to remain in the same range.
That would be what, 12 to 15% of the top line?
11 to 12%, I would say. You're talking about EBIT.
No, PAT. I'm talking about PAT margin.
PAT is not 12 to 13% even now.
Okay, so we got in. Would it be in double digit at least or no?
See, project being there, not possible. If you see the pure project organization in the market, and that to PSUs, none of them are more than 4% and 3%. You can scan the market. There are many organizations. TCIL is one of our competitors. If you see, they are even worse. RVNL from Railways, they are not doing more than 4%.
No, so I'm talking about blended PAT margins, not for particular per se, only projects.
Blended PAT margin, I'm telling because project is getting added to the kitty, certainly will suppress the overall margin, of course. It's going to be there around 8%.
Okay. And FY26 onwards, or the next year onwards will be the same trajectory you're looking at?
I think we'll maintain that, or we might be doing better also.
Okay.
In fact, I would like to add for the benefit of our investors that Railtel is strengthening its cyber security posture, and we hope that something even better. This year also we grew from 70 crores to 123 crores. So, and next year we look for doing even better in data center segment.
Okay. And sir, anything on Kavach? Sorry. Anything on Kavach? Then you can give. I actually joined the call late.
Okay. Kavach, Kavach, I have already told that tenders are coming, and you have seen that Railtel has got recently in February, and there are 3 tenders which are not decided yet. So as and when the tenders coming in from railways, we will be bidding and then try to win new orders.
Okay. And sir, in the Kavach also, the project side would be heavier or would be a product side? How is the Kavach orders coming in for us?
Project side heavier means say what?
In the Kavach, the orders which you get, what would we be more on a project side or for the product side? Like my question is that are more margins?
Margin certainly will be better in Kavach tenders because there we have exclusive tie-up with OEM. But then again, if new OEMs join the market, which is not there right now, there are only 5. But now market, we have seen in the market that even new OEMs are also trying. But again, it will be certainly better than other projects.
Okay. And when these orders will start kicking in the top line, the Kavach orders?
I think this year itself.
This quarter onwards or the next quarter onwards?
No, not this quarter. Maybe by Q3.
Q3. Okay. Okay, sir. All the best to you. Thank you.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Vishal Periwal from Antique Stock Broking Limited. Please go ahead.
Yes, sir. Thanks for the opportunity. Sir, just a clarification. You briefly mentioned that the capex has been higher in FY25 at around 320 odd crore. So is it fair to say the large part of the incremental or the increase which has happened over FY24 is from the data center or any particular segment where we are putting this capex?
Data center is certainly one. But then we are strengthening our network also because network capacities on telecom side, as I told you, we are now focusing on NLD segment. So there also we have strengthened our network capacity, enhanced our network capacity. Similarly, as I told you that our cyber security, we are focusing more on cyber security. So some investments have gone that part also.
Okay. And then, sir, is it fair to say the capex generally happens only in the telecom project side? There is no such requirement of a capex.
Certainly not, because projects which we are doing for customers, but no, this year we have got some OpEx-based orders also where we have to do CapEx. So yes, telecom as a data center and telecom, both are the areas where we will do our CapEx. And sometimes if we are creating network in some new line, so you need everything, all infrastructure, including battery, power systems, and all that.
Okay. And then one thing which I was noticing from a cash flow point of view, though the numbers are pretty good from P&L, cash flow, are you seeing as we move higher on a project side, and that is also on an external party, third party, there will be a requirement for working capital, or do you see, that we are pretty much comfortable at that side also?
Comfortable. We are comfortable on cash flow. Cash flow issue is not an issue.
Okay. So, sir, I think that's all from my side, and come back in the queue.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next follow-up question is from the line of Viraj from Jupiter Financial. Please go ahead.
Yeah, sir. My question, what will be your dividend policy? Would it be the same as before, or would it be better we'll try to make it better?
No, actually, I think your voice was not there for
Mr. Viraj, I would request you to please use your handset.
Okay. Is it clear now?
Yeah, please.
Hello. Yeah, my question was, what is our dividend? Yeah, my question is, what is our dividend policy? We'll try to make it
dividend
better.
Policy.
Yeah, we'll try to make it better. Or...
We will follow the present policy almost in the same line. There's no substance. There's no other change.
They're defined by the government, right? That's the same policy.
Yeah, certainly.
Thank you.
Thank you. The next question is from the line of Pratap Maliwal from Mount Infra Finance. Please go ahead.
Hello, am I audible?
Yes, please.
Yes, sir.
Yeah, hi. Thanks for taking my question. So I wanted a clarification on data centers. So previously we said that we're working with partners who are putting up the major investment. And then for CapEx side, we are saying that, we are putting in CapEx for our data centers. So can you help me understand how exactly is the model working for data centers for us?
See, there are two sets of data centers with Railtel. So there are two already captive data centers owned by Railtel, owned and managed by Railtel. And so there, of course, CapEx will come from us. As data centers, where we have found a partner to set up 100 as data centers, so their investment will come from the partner. They're smaller data centers spread across the country.
Okay. So when you're saying that we expect about 7 to 8 of edge data centers FY26 and the revenue is 10 crores, so this is per data center, this is combined for all 7, 8, we'll get 10 crores of revenue.
This is total.
Okay, total. Okay, and from this 10 crores, we share to our partners, or this is what we retain after sharing?
No, certainly revenue is the total what we earn, and then out of that revenue we'll share. So this is total top line.
Okay.
For this year.
Understood. Sir.
Because these data centers will be set up towards the end of the year also. Some of the data center, some of this edge data center will come in maybe Q4 also. So this year, this revenue is not more than this.
Okay, understood, sir. Thanks for taking my question.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. As there are no further questions from the participants, with that, we conclude today's conference call. On behalf of Antique Stock Broking Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.